Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
Now, I'm very excited to speak with our next guest because I talked to him, Katie, a couple of years ago when I was co-anchoring with Carol Massar. Tim was out, I think, on paternity leave.
Sounds right.
So I subbed in for 5 or 6 months, and we had Marcus Shaw come on. He's Chief Executive Officer at AltFinance. It's a $90 million 10-year effort to reduce the underrepresentation of people in color in private equity. And I just thought it was a fantastic interview. I learned a lot from Marcus. And I remember thinking, man, we got to check back in like a year or two and see how things are going. So I'm pretty pumped that he's back. Marcus joins us now from Washington, D.C. Marcus, great to have you on the program. I'm so glad that I happened to be filling in then and I happen to be filling in now. Talk to us, first of all, about AltFinance and how it's going right now before we check back in on the things that we were working on then.
Matt, thanks so much. Great to hear from you again. AltFinance, we are working on all cylinders. It's been a fantastic first 3 years to this organization. Formally launched in 2021, and here in 2024, we have had nearly 200 fellows that have come through our program or participating in our program now. We've got over 50 graduates that are out in the marketplace, most of them in the pathways for alternative investment opportunities, working either in alternative investment shops themselves or investment banks with their eyes on alternative roles in years to come. And so we couldn't be more excited with the progress that we've made in the first 3 years.
Yeah, that's great. I mean, 2021, you received a $90 million commitment from some big names, Apollo, Ares, Oaktree, for example. So talk to us a little bit more for, the listeners who aren't as familiar with AltFinance, just a little bit about how this came together. Again, $90 million, great seed investors there, that 10-year effort. Just talk to us about how you started.
Well, Katie, what I think is particularly interesting about the history of AltFinance and the incredible partners that we have, Apollo, Ares, and Oaktree, is that the approach for solving the issue around diversity of talent in the alternative investment space, the approach that they took was very similar to the approach that they would take in an investment. A long-term commitment with capital and a solid strategy for execution. And our theory of change is really around finding talent that is high but had exposure to the alternative investment space through the normal recruiting cycle. And ultimately, that target audience were students at historically Black colleges and universities. Historically Black colleges and universities represent somewhere between 15 and 20% of Black undergraduate students and 10% or 15% of graduates. There are over 200,000 of these students throughout the country. And they are leading the industry in areas like healthcare, areas like law and politics and STEM. And so the approach that was taken by AltFinance and our partner firms was, how do we bring this talent pool into the industry of alternative investments? So
you go to these HBCUs, you get students, you've got awesome seed investors to help you. I'm imagining they give you places to put these kids. How have they fared? I mean, have any of them been real success stories? Have any of them come back to you and said, that was fantastic, I want to help too now that I'm doing well? How has it worked out so far?
Matt, that's exactly what's happening. Not only with our 3 partner firms have we had success in placing interns and full-time opportunities for our students, but we've seen success across the industry. And again, the 200 or so fellows that we've had come through our program in the first 3 years, most of those students are moving into the pipeline for alternatives, again, either directly at alternative firms or through traditional banking pipelines. The main thing that's been exciting about this, less than 3% of our students in our first cohort really had an understanding of what that pathway would look like. Now we have those students that are 2 years out in the industry that are coming back and working with new students that are in the program, giving them an understanding of how to move through that process, what classes to take, how to interview, knowing the progression of interviews, and what the true opportunities are across the different business units. So there is certainly a give back. We call it our flywheel effect that allows those first students to now contribute as practitioners in the industry into educating and exposing new students into the industry. But we also have great mentors that are not alum of HBCUs, but are working professionals at Aries, Oaktree, and Apollo that are also dedicating their time to making sure that they're building a talent pipeline of individuals that can come behind them.
It also seems, so when I first talked to you, I understood that you're taking these kids and putting them through, financial company programs. I see now that you're also taking professors, if I'm understanding this correctly, professors from HBCUs and putting them in Wharton. Is that right? What's this?
So we recognize that what we need is a practical solution for a historical problem. The historical problem is that this industry had not exposed itself to a lot of historically Black colleges and universities, even though great talent existed in the students and the professors. We are now supporting, through our Tracy A. Pruitt Visiting Professor Fellowship in partnership with the Wharton School, an opportunity for HBCU professors to spend time as a visiting professor, to learn and build relationships with professors that are operating in the alternative investment and finance industry, and allowing them to elevate their profile as a professor and then bring those insights, learnings, and experiences back to HBCUs to share with their students. We believe that we can gain incredible leverage, not only through educating the student and exposing the student to the industry, but also to exposing the broader HBCU ecosystem through professors and administrators to the industry as well.
And Marcus, it's interesting. I mean, you think about private equity, anything in the private markets right now is so hot. But when you start in 2021, of course, it was also hot, but it's definitely become more and more popular when you think about where young professionals want to go and where the money is flowing as well. I mean, talk to us a little bit about the evolution of the private equity space and how it relates to AltFinance.
Katie, I'm going to take you back 20 years before 2021.
Let's go.
If you look back into the late 90s when I was coming out of school, private markets for endowments at the various schools that these students and students across the country are going to, the school endowments were less than 5% in private markets. Today, those numbers are north of 30 and in some cases north of 40%. So the industry has evolved, and we need to make sure that as the industry is evolving, that we are democratizing opportunity for everybody to participate in the industry. Much like we've seen in tech and like we've seen in healthcare, the financial service industry evolves as well. And so we want to make sure that students that were looking, at capital markets and sales and trading 20 or 25 years ago, that the versions of those high performance today are gaining an understanding of how to participate and enter the private markets as well. We're looking at a market that on a global basis is approaching $20 trillion. That's a significant number, and we want to make sure that people from all backgrounds that have the talent are prepared and have the opportunity to participate in those markets.
I'm excited to talk to our next guest. Sachin Dev Duggal joins us. He's the founder and CEO at Builder.ai. And Sachin, I will never forget, about 10 years ago, Bloomberg Businessweek, the magazine, put out an entire issue on coding. And the message was, if you want to take part in the future, you have to learn how to code. And I thought, oh no, I'm never even going to try and learn, so I'm out. Fortunately, that's not the case anymore. AI can do it for you. Sachin, can you tell us what you think of the possibility that no one is going to have to learn how to code?
Well, I think, that's definitely the future we're hoping on. But it's a much bigger question than just coding, right? It's about allowing people to unleash their potential. I'm sure you had great ideas about software applications that you might have wanted to build, either as a side hustle or in your day job. But before, it just seemed too complicated to actually build any of it. And now you can actually have a conversation with an AI, get a design built, get coding done, and actually have it deployed. And that's really a really good glimpse of the future.
And everything that AI reaches right now is basically turning to gold. And you think about OpenAI and the fact that it's become so valuable in the private markets. Of course, it just feels like investors keep shoveling money at it. And I'm curious, I mean, what you think that says about the industry as a whole right now, because I'm sure some people look at these numbers that are being raised and just the many hundreds of billions of dollars of valuation that some of these companies are worth. Some might look at that and say, this looks like a bubble.
Well, I don't think it's a bubble, right? But I think what it does is it tells you just how early we are. So if you imagine this is sort of like the AOL moment, or at least November 22 was the AOL moment for AI, where suddenly, in that time period, the internet had become prevalent. And now it's this idea that artificial intelligence can coexist with humans and really allow them to leverage, have superpowers and be able to do things so much more efficiently than before. I also think it's not a bubble because this is probably, if not the biggest, the second biggest infrastructure play after the internet, or after telecoms and the internet combined. And because it has such wide ramifications, right? Everything from healthcare to just day-to-day productivity, the infrastructure investment in itself is only just starting.
I wonder what you think about the fact that OpenAI has again raised $6.7 billion.
Sounds right.
Sounds about right. They have $156 billion valuation, and there's no talk of an IPO in the near future. Do companies like OpenAI, do companies like yours now take a much longer time before they have to go to public markets, or never even have to go to public markets at all?
Look, I think there are two or three different parts to this, right? If you imagine, because we're still so early in the technology and it's got so much potential as it sort of unshapes, it's more like pharma than it is software. And we've seen in sort of those deeper tech pharmaceutical developments, finding new cures, it takes a lot more time and a lot more investment. And when you're ready to go public, a part of it is that you've proven out all of the thesis. But because we're still so early, there's a lot of the thesis that's still left to play. For example, everything is not a generative problem. You don't need to use a GPU to do everything, especially once you've trained a model. You should be able to run it on inference, right? It's more like an F1 car than a sports car. So it's much more focused and it can actually do its job really well. And so that's why I think companies like ours, OpenAI and others, are taking a little bit more of a measured approach to when they may go to the public markets, because ultimately they're trying to build a stable position before they do.
It is interesting. I mean, you think about all the promise. We talk about it all the time in the context of public and private markets. And I'm curious, I mean, is there the workforce there? You think about, maybe AI eventually will take our jobs, but to get the industry to that point, do we have the workforce to do that?
Well, so maybe starting with your last point, right? I don't think it's about taking jobs. I think it's about reducing tasks. And so if you imagine, if there were like 30 tasks that you did in a day, and you could now offload 5 of the most monotonous, boring, repetitive tasks, and it could just be done for you, and maybe in the future it's 10 of them, it allows us to do what we do best, which is critical thinking, being creative. And so when you think about this technology making its way into sort of the mainstream, and it's still very early from making its way into the mainstream, really what it's doing is it's allowing human beings to be so much more efficient. And this whole point around upskilling and how to use AI and how folks will actually work with it, I think there's another whole angle to this, which is because the technology is so early, you need to do that. But once this actually gets full flight, you actually will just be able to have normal conversations, normal requests, normal tasks, and it will just do whatever it needs to do to help you out.
What's next for Builder.ai? I mean, what's the future look like? And I guess we can talk about the near future because things are moving so quickly for your company.
Yeah, we came out of beta about 4 years ago. We've seen revenue grow 10x roughly in that period. And I think what I'm just most taken back by is the ingenuity of our smallest customers to our largest customers. For us, the real power still is how can we help the world become digitally native without them having to write a line of code or become a product manager or do computer science. And then as you go from that, the next question people are asking us is, hey, Sachin, it's great you helped us build a piece of software that let us do ABC, but how do we know we're successful? And so you're starting to see people now ask the right set of questions, but don't have the technical skills to even be able to answer that. So when you think about business intelligence or you think about analytics, my next question to folks is, why can't you just ask an AI a question about how are my sales doing in this region? Or, what are the trends that I'm seeing in my best salespeople? And it gives you an answer without you having to hire an analyst that's going to go away for 3 weeks to give you a simple dashboard that you could just get conversationally.
All right. Sachin, great talking to you. Thanks so much for joining us. Sachin Dev Duggal there. He is the founder and CEO of Builder.ai, talking to us about the potential for this technology.